Welcome everyone to Stock Talk on July 11th, and welcome everyone to all-time highs on broad markets. In the past Stock Talks for months, weeks, and even days prior, I've established the point that the market is resilient. The market is not 2018. Okay, we're in 2019. It's not going to mimic 2018. Nothing is completely similar, and that this is a bull market. So when you look at this chart, what we can see here is, first of all, this is the 2-year daily time frame for the S&P 500. You can see that we've had an up move. So actually, let me get this drawing tool up here. See these up move, and then look at this long period of consolidation. What do I mean by consolidation? It means we're trading horizontally for a long period of time, and this was a period of over a year. And now we're breaking towards new all-time highs. Is that bullish or bearish for broad markets? That's very bullish for broad markets. Now, the thing about this is, we've had, during this period of consolidation, we had the initial first scare. If you take a look at this, we're looking at retrospectively, right? Looking back in time, we've had a scare. We've had a major pullback / correction that lasts even longer. We had a smaller pullback, right? We have had 3 major, or minor or major, up to you, but if you looked at this, I'd say this was pretty major if you were trading during that time period, as I was, and now we're breaking to all-time highs. With these whips and dips back down, that is consolidation in the long term for the push higher. So asking you this question, should you be fearful of us making new highs? You actually have to say maybe not, because we've had these fears recently and now the market's pushing higher. And this is reasonable in a bull market, that after we consolidate, we expect the next major bull run for months to come to actually start. Isn't that interesting? Okay, so just wanted to provide more of a macro view, because I usually look at the yearly, the year time frame, or the week long time frame. But when you look at this, you should not be too scared of where we are going right now, right? Contrary to popular belief. So I'm going to remove all these lines down here. Now, can the upside be limited this year? And the answer is yes, right? Just because we cleared all-time highs doesn't mean that we can get a pullback of 5%, right? That's still possible. I'm not dismissing that fact, but in my opinion, that pullback continues to be viewed as a good opportunity after a major bull consolidation, and we're brushing on all-time highs. That has to be viewed once again as positive for broad markets rather than negative for broad markets. So this again is a very bullish chart. Nothing technically wrong where we are right now. I can even establish that this can be, if we look at this can do something maybe like this, and then we continue towards all-time highs. It's very possible, right? And that's just one theoretical scenario, but very possible as we move on forward. And thank you everyone for commenting on the last video. Keep those comments coming. I really enjoy reading them, and I like to tackle your tickers as well. So keep those comments coming. I'll keep these videos coming for everyone as well. All right, let's take a look at a close-up as what's going on. You can see we consistently trade higher. And here's something about market psychology that I pointed out to members here, is I think this is something that's what's happening right now. First, we get a scare, right, at this high, and this is very sudden. No one expects this scare. This is the first scare. So then we recover, and then we get a second scare, and people started becoming a little bit more bearish, right? Slightly more bearish. And then we have some short-term memory, and this is actually a period of several months, and then we make this high again, and then short-term memory, and then we think that we're breaking all-time highs. People call this a marginal new high, and then we started correcting much more than the previous correction. Just think about that mindset. Think about it. A little bit of marginal new high, huge correction. Now, we have a little bit of short-term memory gap here because we started rallying very high, and everyone thinks we're going to consistently go higher, And look, we make another marginal new high and we started dipping rather quickly again. Okay. Now, we made another marginal new high. Did we dip? No. We're making another marginal new high. Did we dip? No. What's happening? That trend is shifting. Okay. That thought process is now shifting. So the marginal new high theory is not playing out anymore. So what's going to happen? So I think that fear is going to keep on going. That's going to propel the markets a little bit higher, especially when you look at the daily time frame. We see no signs of a major reversal back to the downside. There's no sign of a major reversal. We don't even have any candles that specify a major reversal here. So that's what's happening right now. Looking at the resistance of 302, if we continue pushing higher, I would look for even higher numbers for the S&P 500. Doesn't mean that the S&P 500 can get a pullback. Like I said, it's normal for a small pullback as we continue on forward, but that doesn't mean that it's the end of the bull market. This is just solid proof that this is the start, actually, of another major bullish market back to the upside. Isn't that interesting? Very interesting indeed. All right. So with that established, let's look at volatility to see if we can get correlated with where the markets are going and where TVIX is going right now. So when we look at TVIX right now, you're like, whoa, what's going on? Lower highs, lower lows corresponding to broad markets making all-time highs. So TVIX, for what it's worth, continues to be pushing lower. Volatility continues to be pushing lower. This chart pattern does not have to change at all until we can see something else. But until then, this is likely to continue to get rejected near the 20 period moving average, continuously making new lows until we see otherwise. So there you go, TVIX. Interesting move for crude oil. With crude oil, you can see that we were forming a bear flag, but that bear flag actually pushed us up, back to the upside. So what I'm looking for right now is, okay, we know that crude oil is bullish in the long term, but what we can see here right now is it's a little bit overextended, right? It's a little bit too high, and we're looking for this to consolidate a little bit. What I mean by consolidation is, yes, crude oil has proved its point by pushing higher, but I'm looking for another at least drop back towards the moving averages down here around $58 and see how we react off of those moving averages. I think it has a good chance of retracing a little bit before it continues on a possible push higher. But for so far right now, since we've popped over, right, we have, if you can look at this, the resistance is actually up here. So you can see this, the resistance is up here. So the near-term resistance here was a support broke down and we moved lower. So this is your near-term resistance, $61, $60.76, which we've actually hit a little bit today. So where's your support level? Well, if you're looking at support levels, I think one of the primary support levels has to be the 20 period moving average, but they're all the moving averages are so close to each other that this general area is the first level of support I would be looking at. Natural gas. So natural gas had the ability to push higher. And what we can see is a rejection off of the 50 period moving average, as we have done so many times in the past. And so right now, what we can see here is a rejection, and therefore the risk reward is slightly less now in terms of pushing to upside. And so right now we're going to be in between the 20 period and the 50 period, really in no man's land, right? No one wants to take this chart pattern and say that this can be bullish or bearish because we got rejected today. Yesterday we were looking a little bit better than today, but today, because of this more impulsive red candle rejection, got to be a little bit more cautious for natural gas, as this can flip both ways right now. So that's that. No clear chart pattern from this chart. With gold futures, gold continues to consolidate, and I said that gold, though we can have very high intraday volatility, and this is something I explained in the last video, right, on July 8th, intraday volatility doesn't mean that we have to push higher immediately. And so what we see is gold consolidating to the right, and this can take a period of weeks if it wanted to back before another push higher. Okay, so this chart pattern should push higher, But if we see us not being able to go over 1430 after multiple tests in the next few weeks, that is a very defined resistance. I think that even increases the likelihood that we might find a short-term top. So you just got to be careful in gold. But this chart pattern is like this: up move, consolidate, up move, consolidate. This should push up, but we'll have to see how gold fares in the next few days. Last one I want to talk about is BYND, is Beyond Meats. You can see right now Beyond, we only have one moving average. This one IPO'd pretty low down here, and this one has taken off significantly to the upside. You're right, I actually expect more upside for Beyond Meats. When we look at this, this is a clear bull 20 period support. Here's the 20 period line pushing to the upside. This looks sound. Again, a little bit of fear of missing out here, but I can see this pushing even higher, or at least we got to be careful of a resistance around $200. I think that's something to be cognizant to, but we still have some more upside potential left with BYND. All right, good chart. This is on an uptrend again, but we have resistance that's nearby up here. Thank you everyone for watching this video. Hope you liked it. Give me a thumbs up if you enjoyed this video, a thumbs down if you dislike the video, and of course I will see everyone very soon for the next Stock Talk. Thanks.